Welcome back to the deep dive. Today, we're really getting into something fascinating, a real financial paradox that's just, well, it's got people talking. So picture this. Bitcoin, the king, smashes its all-time high, just rockets up to levels we haven't seen near, what, $124,420? Incredible stuff. You'd think, naturally, companies that have bet big on Bitcoin, they'd be soaring too, right? Riding that massive wave. Well, here's the kicker, the thing that's got the market scratching its head. MicroStrategy, ticker MSTR, probably the biggest corporate name in Bitcoin holding, a company everyone kind of saw as the go-to traditional Bitcoin proxy. Their stock, they're stumbled. Dropped about 20%, trading now near $375. So yeah, a pretty big move in the opposite direction of Bitcoin. It's more than just odd. It feels like a real anomaly, a bearish divergence, as they say, and it really challenges what you'd expect from a company so tied to Bitcoin. Our mission today, let's dive deep into this. We want to unpack this disconnect. We're going to explore the different factors, valuation stuff, market saturation maybe, how investors are feeling, broader trends.
We've got a good stack of sources to help us: Crypto.news, Bankless Times, A-Invest, Investopedia, MarketWatch, and the Wall Street Journal too. We want to go beyond just the headline to really get to the why behind this weird market behavior. Hopefully give you some surprising facts, some key insights so you feel really informed on this little corner of the market. So yeah, let's get started. Okay, let's really try and unpack this headline anomaly first, because it's not just a small wobble, right? It kind of fundamentally challenges that basic idea. Company holds Bitcoin, Bitcoin goes up, company stock goes up. Like we said, Bitcoin hits this record high, pushing towards $124,420. That's huge. A massive milestone. Shows real strength in the asset itself. And yet, MicroStrategy, MSTR, goes the other way, down about 20%. That's a significant drop, not just noise. So yeah, this bearish divergence is pretty striking for a company whose whole identity, lately anyway, seems wrapped up in Bitcoin. The puzzle is, how does this happen? What's going on beneath the surface?
Yeah, it's fascinating, especially when you look at MicroStrategy's journey. They didn't just, dip their toes in. They really went for it, pioneered this whole corporate Bitcoin treasury idea on a massive scale. They shifted from being, well, a pretty standard enterprise software company into something completely different, a corporate treasury vehicle almost laser focused on buying Bitcoin. It wasn't a side project. It became their main capital strategy. And the scale is huge. They hold roughly 628,946 Bitcoin. Just think about that. At Bitcoin's recent peak, that stash alone was worth around $74.8 billion. Billion dollars with a B. The super aggressive, high conviction move made them, for a long time, the default Bitcoin proxy for a lot of investors. People who wanted Bitcoin exposure, but maybe, couldn't or didn't want to buy it directly through exchanges. And in the past, that unique position definitely attracted a big premium from the market. There were good reasons for that back then. For one, it was just easier for many traditional investors, both institutional and retail, to buy MSTR stock in their regular brokerage account. Much simpler than figuring out crypto exchanges, wallets, custody, all that stuff. It definitely lowered the barrier to entry. Plus, it offered a kind of institutional wrapper, right? You're buying shares in a public company, reporting financials, regulated to some extent. It felt, well, maybe safer to some. And for quite a while, it was one of the only real ways for big institutional players to get significant, even leveraged Bitcoin exposure without holding the actual crypto on their own books, which frankly can be a compliance nightmare for them. So that mixed accessibility, that feeling of legitimacy and the leveraged exposure, that's what let MicroStrategy command that premium. They were like the main institutional on-ramp for Bitcoin for a while.
Right, that makes total sense. They were the trailblazers, the first big public company to really plant their flag and say Bitcoin is our core strategy. They definitely carved out a unique space. But now, like you said, that premium, that extra bit investors were willing to pay just for the MSTR wrapper seemed to be, well, shrinking. And that brings us right to these valuation concerns. MicroStrategy's market cap is sitting around $107 billion right now. Okay, hold that number. Now remember, their Bitcoin holdings alone were worth about $74.8 billion at the peak. So if you compare the market cap to the Bitcoin value, you get what's called a net asset value, or NAV, multiple. It comes out to about 1.43 times. Now 1.43x, okay, that sounds all right maybe. The company's valued a bit more than its core asset, but here's the crucial bit. Compare that to last year. Last year, that same NAV multiple was way up at 3.3 times. That's a huge drop. It's not just tweaking. It's like the market is fundamentally reassessing the value of holding MSTR. Think of it like, imagine you want this super rare collectible comic book, right? First edition, signed, the only one you can find easily.
Because it's so unique and exclusive, maybe you'd pay, 3 times what the paper and ink are technically worth. That's the premium for rarity, for access. But then what if suddenly a bunch of similar rare comics pop up? Or maybe even easier ways to get the story, like high-def digital versions become available. That exclusivity premium, that extra amount people pay just for that specific comic in that format, it starts to fade, doesn't it? The comic itself is still valuable, but its status is the only or best way to get that value. That's changed because now there are other options, maybe better ones for some people.
That's a perfect analogy. That NAV multiple basically tells you how much extra the market is paying for the company wrapper compared to just the stuff inside, the assets. A high multiple, like that 3.3x, meant investors were really valuing the strategy, the management, maybe just the unique access MSTR provided. Seeing that premium shrink so dramatically signals that the market's rethinking MicroStrategy's value as a proxy. It's not necessarily saying Bitcoin is bad, Bitcoin's doing great. It's more about MicroStrategy's specific role as that proxy and why the rethink. Well, like you hinted, there's just way more competition now, more ways to get Bitcoin exposure. The market's grown up a lot since MicroStrategy made its big splash. What was unique is now, well, less unique. Plus, maybe investors are looking closer at the risks now, right? The company's specific risk management decisions, the software business they still run, their debt, all that stuff comes bundled with the Bitcoin when you buy MSTR. Maybe investors are saying, do I really want all that extra complexity? They're getting more sophisticated about evaluating these hybrid plays.
Right. And that leads straight into this idea of market saturation, doesn't it? When MicroStrategy started this Bitcoin treasury thing, they were pioneers, groundbreaking stuff. But you know how it goes, especially in crypto. Innovation doesn't stay exclusive for long. The sources we looked at suggest over 100 other firms have now copied MicroStrategy's model in some way. Over 100. So now you've got this really crowded crypto treasury field, as one source put it. And that directly hits MicroStrategy's unique appeal, right? If you're the only shop on the block selling something special, you can charge a premium. But if suddenly 100 other shops open up, selling similar stuff, maybe even slightly different versions, that specialness fades. Your value proposition gets diluted because customers, or investors in this case, have so many choices now. It's not just about MSTR anymore. It feels like maybe there's a bit of a first mover disadvantage playing out too. They paved the way, educated the market, dealt with all the initial skepticism, and now others can kind of waltz in on that path they cleared, maybe learning from MSTR's bumps along the road and attracting capital potentially more easily.
They benefit from all that groundwork MicroStrategy did.
Exactly. That erosion of uniqueness is a big piece of it, but it's not the only piece investors are looking at. Another huge factor here is share dilution, massive share dilution. See, to buy all that Bitcoin, nearly 630,000 of them, MicroStrategy didn't just use cash flow from their software business. They issued a lot of new shares. The numbers are pretty stark. Back in 2022, they had around 78 million shares outstanding now. It's ballooned to about 261 million shares. That's more than tripling the share count in just a couple of years. That's how they funded a lot of this Bitcoin buying spree. So what share dilution means, basically, is that each share you own represents a smaller slice of the pie. Imagine the pie itself, the company's total value, including all the Bitcoin, got much bigger. Great. But if they cut that pie into 3 times as many slices, each individual slice is smaller proportionally. So for shareholders, that's a real concern for long-term value per share. The company gets more Bitcoin overall, which is good if Bitcoin goes up. But the value of that Bitcoin is spread across way, way more shares now, so the per-share benefit gets watered down. Investors are always looking at that per-share metric, and heavy dilution can really put a damper on it, even if the total asset value looks good. And on top of that, there's always this background hum of regulatory risk, isn't there? Especially for companies so heavily into digital assets, the rules for crypto are still being written globally. A sudden change in regulations, maybe around how companies have to account for crypto holdings or capital requirements or even taxation, that could really impact these strategies. It adds a layer of uncertainty that traditional investors, frankly, often don't like. They might prefer something more, straightforward and predictable.
Okay, so let's trace that thread. MSTR starts as this novel way to get Bitcoin exposure. Seems simpler, maybe safer for some, but now the market's offering alternatives that people see as cleaner or lower risk. And that directly challenges MSTR's old, unique selling point. Which brings us neatly to the rise of spot Bitcoin ETFs. This has been a huge development. With these ETFs now approved and trading, investors have much easier, much more direct access to actual Bitcoin price movements right through their normal brokers, and other crypto plays too. So what does this all mean for you listening, maybe wondering about getting into Bitcoin? Well, it looks like there are new ways now, perhaps simpler ways, definitely more direct ways to get that exposure, and that competition could be pulling investor money and attention away from companies like MicroStrategy. The market's just evolving super fast. What was unique and essential yesterday might look kind of complex and maybe even a bit risky today, especially when cleaner alternatives exist.
Precisely. The launch of those spot Bitcoin ETFs earlier this year was a genuine game changer. They're widely seen as cleaner and lower risk for some really clear reasons. When you buy shares in a spot Bitcoin ETF, you're essentially getting pure exposure to Bitcoin's price. That's it. You don't have the added layers of MicroStrategy's specific business risks. You're not worrying about, say, how their software division is doing or their corporate debt load or specific management choices or governance stuff. It's just Bitcoin exposure held by regulated financial firms. That's a very different proposition from MSTR, which bundles the Bitcoin with all those corporate factors, plus the leverage they used, and as we just discussed, the dilution risk. So investors who just want straightforward Bitcoin price tracking now have a very clear, very easy alternative. It's a direct line bypassing all the corporate complexity. But it's really important to balance this view. We shouldn't just write off MicroStrategy here. They still have significant firepower, and honestly, the profit on their Bitcoin bet itself is staggering. I mean, despite the stock drop, despite the dilution concerns, they're still buying. They just added another 430 BTC recently. That brings their total to, 629,376 Bitcoin. And here's the number that gets lost sometimes. The company is sitting on over $26 billion in unrealized gains from those Bitcoin investments. That's a massive paper profit from their core strategy working out, at least on the asset side. Plus, the company still has ways to raise money. They can issue more preferred stock, more common stock. They still have significant capital raising capacity, which means they still have the firepower, as the sources say, to ride out market swings and even potentially keep buying Bitcoin if they want to stick to that strategy. So it creates this really interesting paradox, doesn't it? The stock is facing these headwinds, competition, dilution fears, market reevaluation, but the underlying strategy buying and holding Bitcoin has been wildly profitable in terms of asset appreciation. So it forces you to ask, how does the market weigh these things? Does it look at the huge asset gains? Or does it focus more on the future strategy, the per share value, the risks of the wrapper it comes in, especially now that cleaner wrappers like ETFs exist? It seems investors are getting much more picky about how they get their Bitcoin exposure.
Yeah, that difference between the asset's incredible run and the company stock's recent struggle is really the core of it, isn't it? It shows how markets aren't simple cause and effect. And speaking of different approaches, let's look at some alternative models popping up in this corporate crypto space. Because MicroStrategy isn't the only one playing this game, and some others are seeing, well, very different results. Take a company called ETHZilla. Maybe not a household name, but they made waves recently. They were some kind of tech firm. Then they did a big rebrand, pivoted, and basically became a corporate Ethereum treasury firm. So not Bitcoin, but Ethereum, the number 2 crypto. And get this, that strategic shift reportedly led to a massive 500% surge in their stock price. 500%, just from pivoting to holding Ethereum. So what did that tell us? It definitely shows there's investor excitement for other crypto treasury models beyond just Bitcoin. Maybe it's about the asset itself, investors looking for diversification, or maybe they see more potential in Ethereum's ecosystem with DeFi and staking and all that. Or maybe it's just the novelty.
A fresh approach, maybe learning from MicroStrategy's experience and doing it slightly differently in a way the market likes better right now. It could be that the market's rewarding the newness. Maybe seeing Ethereum's potential for yield through staking as more attractive for a corporate treasury, or its role in DeFi. It suggests investors are becoming more nuanced in how they view different cryptos as corporate assets. And when you compare ETHZilla's 500% pop with MSTR's 20% drop, wow, it really makes you wonder what's driving investor appetite. Is MSTR suffering from being the pioneer who took all the arrows? Or are investors genuinely starting to differentiate more between Bitcoin and Ethereum as treasury assets? This market is definitely not monolithic here.
Absolutely. And that excitement isn't just limited to specific crypto-focused companies or just Bitcoin and Ethereum. There's a much broader trend happening that the Wall Street Journal picked up on. Apparently this summer, a whole range of traditional companies, we're talking hotels, even toy companies, collectively raised something like $86 billion. And the key thing, this money wasn't raised for their normal business operations like building new hotels or designing toys. It was raised specifically to buy cryptocurrency, $86 billion. That trend just underscores both the massive enthusiasm, but also, you have to say, the speculative nature of this whole corporate crypto treasury movement right now. I mean, is this really a sustainable long-term strategy for, say, a hotel chain? Or is it more like corporate FOMO, fear of missing out chasing crypto returns? Think about the risks. If your main business is hospitality and suddenly suddenly a huge chunk of your treasury, maybe even your company's focus, shifts to managing volatile crypto assets. What happens in a prolonged crypto bear market? Could it impact your ability to run your actual hotels, pay your staff, service your debt? It's a huge departure from traditional conservative treasury management that prioritizes stability. It's bold, for sure, but it raises serious questions about corporate strategy, risk management, and maybe even fiduciary duty when you pivot so hard from operations to speculation.
Yeah, $86 billion is a staggering number for non-crypto companies to be pouring into crypto. And when you have such a radical, maybe controversial strategy playing out, you're definitely going to get some strong opinions from the finance world. And that tension is briefly captured in this debate between, on one side, the well-known short seller Jim Chanos, and on the other, the Bitcoin advocate Pierre Rochard. Jim Chanos, who's famous for digging into companies he thinks are overvalued or built on shaky ground, he's been pretty blunt about MicroStrategy. He argues that the premium investors pay for MSTR stock over above its Bitcoin value is simply unjustified. His view seems rooted in traditional finance, right? Look at the underlying software business. Look at the debt they took on. Look at the dilution. From his perspective, why pay extra for all that corporate baggage when you can just buy Bitcoin directly or now even more easily through an ETF? He likely sees MSTR as inefficient, overly complex, and just fundamentally overpriced relative to the actual Bitcoin exposure you get.
Exactly. He's looking at it through that traditional valuation lens and seeing red flags. But then you have Pierre Rochard, who comes at it from a completely different, very pro-Bitcoin angle. He actually defends MicroStrategy's leverage, the debt, the share issuance. He sees it all as part of a calculated strategy. He describes MSTR as effectively being a call option on Bitcoin volatility. So what he means by call option, for those maybe less familiar, is it's like a leveraged bet that Bitcoin's price will go way, way up. Rochard argues MicroStrategy isn't just buying Bitcoin, they're using financial engineering, like issuing shares and debt, to acquire more Bitcoin than they otherwise could, amplifying the potential gains if Bitcoin moons. From his view, MSTR offers this unique, concentrated leveraged bet on Bitcoin's upside that's hard for regular investors to replicate. He sees the complexity and dilution as the cost of admission for potentially much higher returns if you're super bullish on Bitcoin long term. It's a high conviction, aggressive play.
That contrast just perfectly sums up the whole debate, doesn't it? You've got traditional financial skepticism clashing head-on with crypto-native conviction. Chanos sees an overvalued, risky structure. Rochard sees an ingenious, leveraged vehicle for maximizing Bitcoin exposure. It's not just about MSTR, really. It's a mini version of the bigger debate about how we value companies adopting these new volatile assets. It shows why even the experts are divided, which really means you, the listener, need to weigh these arguments and form your own view.
And moving away from the fundamental arguments for a second, let's look at the technical picture for MSTR stock itself, just the price chart. That's showing some potentially worrying signs, too. Technical analysts, the folks who study charts and patterns, they point to a critical support level for MicroStrategy stock right around the $358 to $360 zone. Now, a support level basically is a price where buyers have typically stepped in before, preventing the stock from falling further. It's like a historical floor. But the warning here is pretty stark. If MSTR breaks below that $358, $360 support level, the analysis suggests it could lead to a sharp drop toward the $380, $304 range. So if that floor gives way, the thinking is that the selling could really accelerate, potentially leading to much bigger losses as confidence breaks. It's a technical red flag suggesting downward momentum might build if that key level doesn't hold. It's purely based on price action, separate from the Bitcoin value or strategy debates.
Okay, so the chart watchers are maybe getting a bit nervous, warning about a potential drop if that $358 floor breaks. But then, just to make things even more confusing, you look at what the Wall Street analysts are saying, the ones putting out price targets and buy-sell ratings. Despite the stock's recent 20% drop, despite those technical warnings, some analysts are still pretty bullish. The average price target from the analysts covering MSTR is apparently hovering around $569. So wait a minute, technicals warn of a drop towards $283, maybe $300. But fundamental analysts are targeting, on average, $569. That's a massive gap. How do you square that? It just perfectly highlights the huge uncertainty and the completely different ways people are interpreting MicroStrategy right now, doesn't it? It's clearly not just about Bitcoin's price. Different analysts are weighing the dilution, the ETF competition, the value of the Bitcoin stash, the software business, their own Bitcoin forecasts. They're weighing all that differently and coming to wildly different conclusions. It proves that even the pros don't have a crystal ball here.
There's no single right answer, which again underscores why you need to listen to all sides, understand the moving parts we've talked about, and then make up your own mind based on your own risk tolerance and outlook. So let's try and wrap this up. Our deep dive into MicroStrategy's Bitcoin paradox. What have we really unpacked today? Well, the bottom line is, It's definitely not a simple Bitcoin goes up, MSTR goes up story anymore. It's way more complex. We've seen that premium MSTR used to enjoy shrink significantly, not because Bitcoin's weak, but because there's just so much more competition now, over 100 copycats, plus those big shiny new ETFs. Market saturation is real. We dug into the massive share dilution needed to buy all that Bitcoin and how that worries investors focused on per share value, even with the huge BTC stack. And yeah, the rise of those spot Bitcoin ETFs seems like a real game changer, offering a cleaner, maybe lower risk way to get Bitcoin exposure, which pulls demand away from the proxy model MSTR pioneered.
Exactly. It's become this really nuanced story about corporate strategy meeting changing market dynamics and evolving investor preferences. The core Bitcoin bet has paid off handsomely in terms of unrealized gains on the asset itself, no question there. But the market is now looking much harder at the method, the vehicle, the wrapper that Bitcoin comes in. They're asking about efficiency, about risk, about alternatives. It's not just about the pile of Bitcoin anymore.
Right. It's about the vehicle, not just the destination. So, thinking about everything we've covered, the shrinking premium, the dilution, the competition from ETFs, the expert debates, it leads to a final thought for you listening. How do you see MicroStrategy now? Is it still that high conviction, leveraged bet on Bitcoin's future, a compelling proxy? Or do these newer, more direct options, especially the spot ETFs, seem like a safer, maybe just more straightforward and appealing way for you to get Bitcoin exposure today? It really comes down to that balance, doesn't it? The potential reward from leverage versus the cost of dilution and complexity. How does that fit with your own investment approach? Something to definitely mull over. And hey, if you found this deep dive helpful, if it gave you some clarity or food for thought on this complex topic, we'd really appreciate it if you could hit that like button, maybe subscribe to the deep dive if you haven't already, and click the notification bell. Seriously, every like, every comment, every share, it really helps us out.
It tells the algorithms that you find this stuff valuable, boosts our visibility, and honestly, it just lets us keep making more deep dives like this one for you. Your support genuinely makes a difference. Thanks so much for joining us today on The Deep Dive.